Hello, welcome back to my YouTube channel. Today's video is going to be on solving basic journal entries and eventually connecting it to them to asset liability, capital income, and expenditure. Let's start with today's video. Today's video is on basic journal entries and we'll quickly revise the content from first two videos, which is three golden rules of accounting and basic terms. Asset liability, capital, income, and expenditure. All right. Three golden rules of accounting. There are three accounts: real account, personal account, and nominal account. Real accounts rule: debit what comes in, credit what goes out. Now, personal account: debit the receiver, credit the giver, and nominal account: debit all expenses, losses, and credit all income gains. All right. Then the next five basic terms are asset, liability, capital, income, and expenditure. Asset is anything that we own. Anything that gives us a feeling कि ये चीज मेरी है, that is asset. Now that thing, जो चीज मेरी है, चाहे वो मेरे पास है या मेरे फ्रेंड के पास है या किसी के पास भी है, वो चीज मेरी ही रहेगी. Therefore, an asset is anything that belongs to you, whether it is kept with you or with anyone else. Liability is किसी और की चीज अगर मेरे पास है, that is my liability. It's constantly in my head that I have to repay that person. That is a liability. Capital, amount invested by the owner in the business. घर से अगर ओनर कुछ भी बिजनेस में लेकर आया, that is your capital. Income is your revenue. जो goods और services बेच के हम पैसे कमा रहे हैं in the business, that is your income. And expense is all our kharchas that we are incurring to make sure that we earn an income, which is rent, electricity, salaries. These are our expenses. All right. So with this quick recap of what we did in previous videos, let's go on to journal entries. If you want a detailed explanation of these two, there are two different YouTube videos for it, and the link for it will be shared in the description box. My first transaction here is Kavya started business with cash rupees 5 lakh. Before starting journal entry, we need to understand one thing, that while recording transaction, we and our business are two different entities. So here, Kavya and Kavya's business are two different entities. We're recording transactions for Kavya's business. So we have to record from business point of view. We have to apply all the rules from business point of view. Okay, let's start. Kavya started business with cash rupees 5 lakh. Started business means she's getting money from her home to the business. घर से business में कुछ भी आता है उसको क्या बोलते हैं हम? We call it capital. So this is Kavya's capital. And the other item is cash. Cash is real account. Kavya's capital is personal account. Debit the receiver, credit the giver, and real account ka rule: debit what comes in, credit what goes out. So here we have to think from Kavya's business point of view. Kavya is giving cash into the business. So cash is coming into the business and Kavya is the giver. Therefore, Kavya's capital is credited. I'll write serial number. If date is given, then we'll write date. My journal entry will be cash account debit to Kavya's capital account. I'll just write DR here for the debit and amount is 5 lakh. My debit and credit have to be equal always. That's the first one. Let's move on to the next one. Paid office rent and paid by check. So we are paying office rent and the amount is paid by check. My two items here, one is office rent and the next one is check. Check basically means bank account. You're paying by bank account. I'll zoom in a little. And any bank account will have a name attached to it. So this would be Kavya's bank account because I'm doing journal entries for Kavya. A name is attached, therefore it's a personal account. And office rent, rent. Can you see, feel, touch, rent? No, therefore not real. Is it personal? No. There's no name attached to it. The only option left is nominal. Also, nominal is all services. Rent is a service. Therefore, nominal account. Debit all expenses, losses. Credit all income gain. Personal account, debit the receiver, credit the giver. I am paying office rent, therefore it's my expense. And Kavya's bank account is the giver. You've got your match. Let's write down in the journal entries format. Office rent account or just rent account debit to bank account. No need to write Kavya's bank account because we're going to pay by our bank account only and we are Kavya. So no need to mention the name again and again. And amount is 20,000. All right. Let's move on to the next one. Received a salary of rupees 50,000 by cash. My two items here are salary and cash. Salary is a nominal account and cash is a real account. We can see, feel, touch cash, right? Therefore, it's a real account. Real account rule, debit what comes in, credit what goes out. Nominal account rule, debit the receiver, debit all expenses, losses, credit all income gain. I am receiving salary, therefore it's my income. I have to think from business point of view. And cash is coming into the business. So my journal entry would be cash account debit to salary account. How much is it? 50,000. Let's move on to the next one. Took a bank loan of 4 lakh from HDFC Bank. What are my two items here? One is HDFC Bank and the other thing is we are receiving the money in our bank. So our bank account is the another item. It's not mentioned here, but it's hidden. So my two items is Kavya's bank account and HDFC Bank. Both are personal accounts. They both have name attached to it. Kavya and HDFC is an institution. Rule, debit the receiver, credit the giver. Here again, debit the receiver, credit the giver. Kavya's bank account, which is us, हमें पैसे मिल रहे हैं. तो हमारा bank account is the receiver. And HDFC is giving us. So that is our credit. But how will we write this? We'll write bank account debit. Credit में लिखते वक्त I will have to mention HDFC Bank loan account. You have to mention the word loan. Debit amount is 4 lakh and 4 lakh. All right. We're done with these basic journal entries, but I'm going to connect them to asset, liability, capital, income, and expenditure. Please have a look. Cash account to Kavya's capital account. Cash account, जैसे ही business में cash आ गया, वो cash मेरा हो गया. If anything that is mine, that is asset. And capital is capital. Asset is increasing, capital is increasing. So I have to classify between asset, liability, capital, income, or expenditure. Let's have a look at the next one. Rent account debit to bank account. Rent is my expense. That we are getting to know even from the rule, which is nominal account debit or expenses. Rent is my expense. Expense is increasing. Bank account. बैंक अकाउंट में पैसा तो मेरा ही है, therefore मेरा बैंक अकाउंट है. Anything that belongs to me is your asset. Bank account is your asset, but here your bank account is reducing, your bank balance is reducing, therefore asset is reducing. Next one, cash account to salary account. Cash मेरा ही कैश है, तो कैश एसेट हुआ. सैलरी मेरी इनकम है. यहाँ पे कैश बढ़ रहा है तो एसेट बढ़ रहा है, इनकम भी मेरी बढ़ रही है. And the last one, bank account to HDFC Bank loan account. Bank account is my asset only, my bank balance. मेरा बैंक अकाउंट है, asset increasing. And loan tells you that किसी और का पैसा मेरे पास पड़ा है. जब ऐसा होता है, it's constantly in your head, यार उसको repay करना है. Loan is your liability increasing. All right. So with this, we can conclude asset, liability, capital, income, and expenditure. In the first journal entry, asset increasing is debited, liability increasing is credited. In the second journal entry, expense increasing is debited, asset decreasing is credited. In the third journal entry, asset increasing is debited and income increasing is credited. And in the last one, asset increasing and liability increasing. Asset increasing is debited and liability increasing is credited. So with this, we conclude that asset increasing is debited, asset decreasing is credited, liability increase is credited, liability decrease would automatically be debited, and capital increase is credited, decrease would be debited. So liability and capital work in a similar fashion. Liability, capital, and income, they all work in a similar fashion, and expense and asset work in a similar fashion. I hope this is clear to you. With this, we come to an end to this video. I hope this video was useful to you. I'll be sharing a link to a document with more of journal entries transaction. The document will also have solutions, so please try to solve them, and also make sure that you connect it with asset, liability, capital, income, and expenditure like we did towards the end of our video. If you have any other doubts with respect to this video, please drop it in the comment section and I'll make sure that I answer them. Thank you so much again, and I'll see you all in the next video. Till then, bye-bye. Thank you. Take care.